Hi guys, and welcome back to the channel. Now 2025 has been an interesting year for investors. Me personally, I started the year with just shy of £34,000 invested, and I've now grown this just past £67,000. That's an increase of £33,000 in 12 months, which I didn't think would be possible. In today's video, I'll go through all three of my portfolios, showing you exactly how much I've invested, exactly what I've invested in, and then at the end we'll go over those top line stats to see those percentages and exactly how much I've made this year. First, we'll look at my Trading 212 platform. Now this is the portfolio where I pick individual stocks and have a slightly higher risk appetite. Then we'll look at the InvestEngine portfolio, and this is where I built my own DIY global fund. And finally, we'll look at my oldest and largest portfolio over on the Vanguard side. So let's get started with that Trading 212 portfolio. Okay, so jumping straight onto the app here on Trading 212, straight away you can see that we've got a total account value of £7,175. You can see our returns there of just shy of £1,500 of growth and a rate of return of 99.3%. Don't worry too much about that rate of return percentage because I'm going to cover all those top line figures towards the end of the video. But this is a portfolio I started on the 1st of May. This is where I put a lot more of my riskier investments, if you like, and I try to keep it within the 10% mark of my overall portfolio, if you like. Just to keep that risk down at a minimum. So if we have a look at what is within this portfolio, my top or largest holding here is SOFI Technologies at 100 shares of this. Seems to be performing really well. This is a company that I plan to hold well into the future, and it's definitely a long-term hold for me. 100 shares and around $19 average buying price, and the current price is around $27, so making pretty good returns on that particular stock. And again, this is a stock I'll continue to buy more of over time. Second highest is Grab. So for anyone unfamiliar, think of Grab as a bit of like the Uber but of Asia. They have a load of other services, but they hold a lot of the market over in Asia. Uber doesn't really have as big a presence over there, so really interesting stock, this one. I am down on this. I probably got into this stock a little bit late than I would, later than I would have liked to. But yeah, down 1.37%, 390 shares of that. It's been trading fairly sideways this year, and I've been just averaging in, every other month, buying more as and when the price dipped a little bit. But yeah, I'll probably do a full video on that particular stock, so keep your eyes peeled for that one. My third highest holding is AMD. I've only got 7 shares of AMD, but each share is worth, a lot more. If I click into there, you can see that each share is currently worth just shy of $215. But yeah, made really good gains on this one, up 82% as you can see there. The price is quite high at the moment and kind of holding out for potentially another dip to buy in more, but yeah, really happy with the progress on that particular stock. Next, we've got Take-Two Interactive. So for anyone who's unfamiliar, Take-Two Interactive is a gaming company. It's in the gaming industry, and one of the biggest sort of names under that label is Rockstar Games, which hold the keys, if you like, and are the creators of the Grand Theft Auto franchise and also things such as Red Dead Redemption. They've got a load of other sort of labels underneath this brand with a massive portfolio of games, but with the anticipation of Grand Theft Auto coming out next year, I thought I'd slowly average into this. So the gains haven't been too massive yet. I've only got 5 shares of this, up around 12%, but I think as the game releases at the back end of 2026, then 2027, 2028, when those revenues really come through on this game, providing it's a hit, that's where I'm going to look to profit there. I did a full breakdown video on that particular stock. I'll link that at the end of the video if you'd like to check that out. It's kind of my thoughts and research behind investing in that particular stock. After that, we've got Rolls-Royce, which is a pretty small holding. I've only got 60 shares of that, and that's up around 21%. Then we've got Palantir. I've only got 4 shares of this, and that's up around 66%. And then after that, these are 2 that I invested in, I believe, in the last couple of weeks. So I got 1 share of Google after researching their AI pieces and the AI piece of the business, quite extensively. I was quite impressed with what I saw. So I thought I'd add Google into this particular portfolio, and then also Shopify being, the biggest e-commerce platform in the world. So yeah, these are those two at the bottom. You can see we're down 5% on Google, but these are ones that I'll probably average in slowly over the next, sort of year or two, and the same with Shopify. Any of the red on here doesn't really concern me. I just think, well, the stock's down, so I can buy more at a discount. These are all companies that I believe in long term. I'm not looking to make a quick bit of money and then dip back out. But yeah, only been investing in this particular portfolio since the 1st of April. So to get these returns in the space of, what is, I guess it's a sort of 7-8 months, I guess. Really happy with those returns. And yeah, I'll continue to just invest in these as and when. Again, it's currently making up over 10% of my overall portfolio, so I'll probably hang back a little bit and wait for the rest of the portfolio to catch up before I invest more. But yeah, these are my sort of more fun picks, if you like, and slightly more riskier investments. Okay, so now moving on to my InvestEngine platform. So you can see here within the ISA section, I've built my own DIY global fund, which I've named the Elevate All World, and then the DIS means distribution because it does pay a dividend. So if I click into there, you can see that this portfolio balance is just over £14,000. At present, this has been a really steady growth piece for me, and this is where I am currently investing the bulk of my money, if you like. Only started investing in this particular portfolio this April, so it's already amounted to quite a large amount there. You can see straight away in these top details, I deposit £1,000 a month, almost like a direct debit. It goes out at the start of the month, whether the market's high or low. We've got a 1.22% yield there, but the key here is that 0.05% total expense ratio. So I'll cover which ETFs I've built this overall fund up with shortly, but the key behind this is that low expense ratio and also the higher yield. If you go with a one fund, one sort of does it all global fund, they work just as well, and you could argue that the differences are really quite minimal. However, the fees, you're probably looking at 0.2%, so around 4 times higher than what this portfolio offers me. This also has a higher dividend, and it also gives me flexibility to invest in different areas, whereas your typical global ETF, you can't pick out within that. Say if you wanted to invest in Japan, because you saw that market, there was a bit of a drop, bit of an opportunity, you can't split that out within that one fund. Whereas as you can see here, and again I'll cover back to this, come back to that graph shortly, I've got mine all split out by different regions and ETFs. There's 6 ETFs in here, so I'll quickly cover what these are. 67% of this DIY fund is made up of the S&P 500 using the SPDR fund. It's got a really low expense ratio on there. Then 11% is the Vanguard Developed Europe fund, excluding the UK, and I'll cover why that is shortly. So that one covers a lot of my European exposure. I've got 9% within the FTSE emerging markets. I've then got 6% in the Amundi Prime Japan ETF, so around 6% there. Coming back to the UK here, so that HSBC fund, that covers the FTSE 100 here in the UK, which is why I went with that European fund earlier, which excludes the UK, because I've got my UK exposure within this particular ETF. And then I've also got the Vanguard Developed Asia ETF, which excludes Japan. So similar scenario as before. But by doing this, I have a lot more control in terms of, if one day I decide, actually, I'd like to increase my exposure in the UK market, for example, I can change that percentage there. I could ramp that right up to whatever I really wanted and reset those weightings within the portfolio. So going over this, we've currently up 26% within, the S&P 500 in that top ETF there, with £810 worth of gains. In the next one, which is the European one, so the Europe market, we're up 23%. Emerging markets up 24%. My Amundi Prime Japan ETF is up almost 24% as well. FTSE 100 has had a pretty good year, so up over 26% there. But really, the highlight, and almost a bit of a shame that it makes up such a small weighting within this portfolio, is my Vanguard developed Asia Pacific ETF, which excludes Japan. But that's up over 37%, which is huge, which only gives me around £50 worth of gains there. But yeah, look, it's typical. It's just the way it goes. I'm not going to rebalance the portfolio yet, unless I see a bit of a pattern trending. I think that region just had a particularly good year. It may continue, it may not, but again, I can, the good thing with this is that I can change those percentages. And again, that comes back to why I've built this portfolio, so I have that flexibility and that control. Now, one other thing to note here, so my net contributions this year are £13,000. However, you can see here at the top, I'm currently holding just over £2,000 in cash. I added this in this month, an extra £2,000, but I'm yet to invest this. Now, the market's been fairly flat recently. If anything, it's been on a slight decline. I'm holding out to invest that £2,000. So I'll still invest my regular £1,000 at the start of every month, whether the market's high or low. But that £2,000 is waiting for an opportunity, if you like. So I have a feeling, and again, I don't have a crystal ball, but I have a feeling the market may drop in the next sort of 6 months, at which point that's when I'll look to deploy these additional funds to basically buy into the market as a slight discount and then make some gains short term there. So yeah, up almost 27%, just over 27% in this portfolio. If we go to dividends, again, it's not really designed for high passive income, this portfolio, but you can see there we've got over £61 worth of dividends received so far from this portfolio. So yeah, really happy with the gains on this particular portfolio. Like I say, only been investing in this one since April, so we've not had years and years to compound. But yeah, this is where I'll be putting most of my money for the foreseeable. So now moving on to what is my oldest and also largest portfolio. So I'm doing the statistics here as of the start of this year. So the 1st of January that you can see here and ending today, virtually the end of the year, bar a couple of days. So you can see we started the year with just shy of £34,000. Now at the time, this was the only portfolio I did have. I didn't have the Trading 212 platform or the InvestEngine platform. Those have both been new this year. So you can see here, I've contributed around £6,500. That was at the start of this year. And then I basically took my foot off the gas with this portfolio because I was focusing on the other two. I haven't contributed after March, I believe it was, at all within this portfolio. And then since then, this year we've had over £5,000 worth of gains, which is giving me a rate of return of around 13%, which I'm really, really happy with, given that I've barely opened this portfolio to have a look this year. So if I have a quick look on the month tab, here we'll be able to scroll back. So you can see in January, February and March, I invested quite heavily. That was purely to make the most out of my ISA allowance for the year, to make sure I was topped up to that £20,000 allowance. And within there, look, you can see, if I go into personal returns here per month, February the market started to come down. March the market really came down even further, and again in April this did wipe out quite a lot of those gains. And it was around this time that you can see that I was buying even more, because I thought, great, the market's down, let's buy more. But since then, look, the market has rallied in certain months. But overall, we've gained just over £5,000 for the year. So you can see within this portfolio, we started with just under £34,000, and we're ending with just under £46,000, which is fantastic. So quick look at the calculations, because there are some dividends in here. You can see here £510 of that is actually in dividends, which is great. If we look into the investments tab, so this portfolio was something that I built over the previous 2 years. there's a bit of a mishmash in here of ETFs. This is when I was trialing things, trying different ETFs out, trying to increase exposure in some areas and reduce it in others. It was a real sort of learning curve. If I was redoing this portfolio, I wouldn't do it like this again. I'm not saying this won't continue to make good gains in the future, it probably will, but there is quite a lot of overlap. And what I mean by that is you can see a large portion of this fund is in VWRL, which is an all-world fund. But then I also, on top of that, have a US S&P 500 ETF. So a lot of those funds will be investing in the same thing, which is a bit silly, really. And again, the UK there, Japan, we've got the Developed Europe Fund and also an Emerging Markets one, all of which are covered within VWRL. So there is a lot of overlap here, and it's not how I'd want to do it again, which is why I went and built that portfolio over on the InvestEngine platform. That was essentially taking everything I've learned over the last few years and putting that into what I believe is a better global fund. So we can see here of this year, the standout figures was actually from the UK. My FTSE 100 ETF, I believe, has had the highest. Oh, no, sorry, it was the Developed Europe one, but very similar, around 24-25% there. We've also then, behind there, probably Emerging Markets, and then, the sort of global fund there, or all-world fund as well. So, like I say, bit of a mishmash here, but overall, considering, if I go back onto that month tab, I have not contributed or added another penny since March. So it has just been sat there. And if we go off that, we started April with just over £38,000, and we're now up at almost £46,000 without adding another penny. So they're really, really impressive gains. And this just shows that you don't always have to be adding money in once you've got to a certain point or got a certain value in there, which I think, £30,000 around that mark is a substantial amount of money. And it just shows that even at that value, the compounding effect starts to work in the background. And, in theory, I could now leave this for years and years, and you'd hope that this number is still going to snowball away. Sort of plans for this really is to not add anything else, because my key focus is that InvestEngine platform, and then also topping up with the Trading 212 platform as and when I find a company that I really like the look of and really want to invest in as an individual company and not within an ETF such as this. Quick look at the Insights tab here. Very heavy sort of North America dominated this portfolio at 69%. And again, that's probably to do with a lot of the overlap that I mentioned within the ETFs. 4% in the UK, 13% in Europe. Asia Pacific makes up around 6%, as does Japan. Top 10 holdings within this entire portfolio is 4.6% in Apple, then Nvidia, Microsoft, Alphabet. Basically, the Magnificent Seven are taking that top spot there. And then a fairly evenly split here on the actual sectors. Now, this is quite interesting because a lot of the big ETFs will have a really high tech focus, which mine is still high, but the financials always is level. And then even consumer discretionary and industrials aren't too far behind. So the actual sector split is quite fairly split across those first 6 industries. So that's all the portfolios covered individually, but now let's take a look at those top line stats. With Trading 212, this is a brand new portfolio for 2025, so it started from zero. Over the course of the year, I added £5,712.98, and that's now grown to £7,175.88. That gives me a nominal return of 25.61%, and I'm really happy with that, especially considering this portfolio has only been built up over the course of this year and purely focuses on individual stock picks. Moving on to my InvestEngine portfolio, I added in a total of £13,000 and it now sits at £14,234.51, which gives me a nominal return of 9.42%. Given the relatively short time frame and the more defensive nature of this portfolio, I'm really happy with that performance as well. And finally, my oldest portfolio over on Vanguard, I started the year with £33,946.83. And I only made contributions during the first 3 months of the year, adding £6,575 in total. That brings my total invested amount to £40,521.83 for the year, and the portfolio is now worth £45,754.72. That gives me this year's nominal return of 12.91%, again, which I'm really pleased with considering there's been very little new money added for most of the year. With my starting balance and also my contributions, I had an invested amount of £59,234.81, and my portfolio is now worth £67,165.11, so that's a total gain of £7,930.30 just for this year. Now, if you weight each portfolio properly based on its size, that gives me a blended nominal return of 13.39% for 2025. So that sums up this portfolio for 2025, and I'm really happy with these results. It's definitely not been a record year where investing conditions are concerned, which actually gives me more confidence on what we've been able to achieve this year. Knowing that I've been able to achieve almost £8,000 in gains in a less than ideal market really gives me more confidence. It does make me think what kind of returns we could get in a really favourable year. Outside of that, one thing I'm particularly happy with is how I was able to time the market slightly this year. I don't normally try to time the market, but when the market dropped earlier this year, I did invest quite heavily, and I have made some short-term gains off the back of that. On a side note, being the sad little loser I am, I've just realised that I wrote down goals to start this year. One of those goals was to have a stocks portfolio worth over £50,000, and I've absolutely smashed that goal, so I will take it. Now, looking ahead for 2026, the key goal for me is to get as close as I can to that £100,000 mark. I plan to keep that trading 212 portfolio at no more than 10% of the overall portfolio, and the only reason for that is just to limit risk. The main focus for next year is to continue investing in that DIY global fund over on InvestEngine. The only changes I'm thinking of making is potentially bringing in some commodity-based investing. This will also be done on InvestEngine, but I'm thinking of potentially investing in things such as gold and silver, purely to diversify even more. I'm still researching this and making a real plan, but as soon as I know more, I will make a video on this. Investing aside, I've been posting fairly consistently this year, and I've managed to accrue quite a few subscribers, or at least quite a lot to me anyway. For anyone who's tuned in for a video, liked a video, or even subscribed, truly thank you. It's been really nice to see this little community grow on my little corner of the internet. So thanks to all of you for tuning in this year. I hope you have a great new year, and we'll catch up in 2026. Thanks for watching, and I'll see you in the next one.